So even though you're self-employed and you own your own business, if you're the one doing all the work, well, you're still trapped. You can never really have freedom because you're trading that time for money.
You're asking yourself, why am I doing this?
Smart people would know how to use all these different tools.
You start with something small.
You'll never get your entire organization if you don't pull off operations. Don't give up.
It can be as small as that.
I think you guys are going to have a blast today.
What is going on, everybody? Welcome to the Delegate That podcast, where we discuss the art and science of delegation, business management, and leadership. I am your host, 𝗟𝗶𝘀𝗃𝗃, and I am stoked to have a conversation with Alex Velazquez. Alex, if you can, please go ahead and introduce yourself and tell us about your businesses.
Yeah. Hey, how's it going? My name is Alex Velazquez. I'm based out of Los Angeles. I'm a CPA by trade. I've spent most of my career at KPMG. Based out of the LA office doing external audit. I did a 3-year international rotation in our Sao Paulo office in Brazil. So I spent 3 years in Brazil, kind of head up the SEC desk out there, and was helping a lot of our SEC registrants with component audits out there, work on, SEC regulation, PCAOB audits and things like that. So came back, left KPMG, and started what today is Horizon Advisors. So we provide technical accounting advisory services for middle market corporations. So these are pre-IPO, recent IPO companies, between the 50 million to 5 billion in revenue that need support with SOX implementation. 𝗟𝗶𝘀𝗀𝗃𝗀𝗃, very technical, kind of robust process there that we specialize in. Also financial reporting. We do technical memos. If there's an acquisition or a convertible debt offering, we'll kind of make sure the accounting treatment's correct. And some fractional work, fractional controller, fractional internal audit, or financial reporting director, which fits in well with some of the services that we do. And then we recently launched a second business. We now have Beyond the Books, which has been in operation for about a year now. And so what we do is we essentially take all those best practices that we see in these large corporations, in their finance and their accounting departments, and we apply those to small businesses, right? Most small businesses, you have a great operator. They know exactly what they're doing in their field, but maybe they don't understand that, the financials and the bookkeeping and the accounting is very valuable for driving that ship, for managing that business, right? And there's a reason why you see these large, robust, departments in these large corporations, because those executives are using that data to drive the ship, right? So, excuse me. A lot of times you'll see these, small business owners that are really just using the books and the bookkeeping for tax purposes. But what we do is we take on the bookkeeping, and then we provide insights on their financials. So we do monthly financial statement analysis to identify kind of, what's going on in the business. Is it as expected? Is it moving in the direction you'd like it to move? And then we also do cash and working capital projections. So on a weekly basis, we'll look out 30, 90 days and just get ahead of any cash needs or any cash surplus that we see on the horizon there. So that the operator can be comfortable taking cash out of the business and know that it's not going to impact the business. Or maybe down the line, we see that we're going to have to inject cash or draw on a line of credit, and we can get ahead of those decisions as opposed to, being right up to payroll and, scrambling and trying to figure out why we're not going to cover payroll and all these things. So getting some clear visibility on that is very valuable for some of our clients. We also do quarterly estimated tax payments. We help kind of fine tune those calculations and work with the tax CPA to make sure that, those estimates that are being paid are not underfunded. So you don't get a big surprise catch-up contribution at the end of the year. So, those are the two businesses that we're running. And it's been a long journey. I mean, especially with Horizon, we've been in business for about 8 years now. And so I've spent a lot of time building that business out, and the operations and all the different departments that, in the beginning, it was just me doing everything, So happy to share and discuss kind of how we got to where we are today, some of the challenges that your listeners can avoid, and then some best practices that we implement for our clients that people can start demanding of their existing bookkeepers or accountants.
Do you feel overwhelmed with mundane tasks that eat up your valuable time? It's time to reclaim your schedule and focus on what truly matters. Get your time back with elite remote talent without the time zone hassle. Delegate $10 an hour tasks to focus on more $1,000 an hour tasks. Schedule your free strategy call at 𝗺𝗍𝗺𝘀𝘀𝘀.io.
Yeah, I'm personally in the process of wanting to remove the bookkeeper and accountant from the company that I just bought. So it's like, this is all fresh on my brain. So I'm going to try not to take out my personal frustration on any conversation we have here. So, let's kind of talk about the development of Horizon, right? So I mean, you've been 8 years, and before we started recording, you talked about you've already delegated a majority of it. There's a few things that you haven't, right? So we're definitely going to pivot into the beyond the book side because if for nothing else, I'm very curious myself on what that looks like. But let's look about how you built this business. You went from doing all of this on your own with KPMG, and then saying, I want to go do this by myself. I want to go over here and be my own boss and be the builder of my own business instead of somebody else's. So let's start with that creation to where we are now and how you kind of started building that out.
Yeah. So, I spent the majority of my career at KPMG in external audit, right? And in that environment, those large firms, they really demand a lot out of you, right? And we end up working really ridiculous hours. It's a lifestyle that's, some people would say is unsustainable, but I really credit it to a lot of the value that I'm able to provide for our clients because, people that kind of go through that, that experience, they learn a lot, right? So in 5 years at a firm like that, you'll quickly learn what most people will learn in 10, 15 years, not in that environment, right? And the people that survive in that environment, they've really been tested and they know, that you can kind of, you can take anything and do well at it, right? So a lot of what I do today came from the experiences that I had at KPMG. I mean, as a senior manager in the external audit practice, you're tasked with, organizing and managing, anywhere between 5 to 15 audits in a year. And these are full year projects, very meticulous, very, you've got to coordinate a lot of different schedules, but you're doing a lot as a manager. You have to make sure you have the resources and the team in place to execute, that they're strong, good quality people to do good work. You have to bill your clients and follow up and collect on those payments. You have to review the work and make sure that it's quality and that you're providing, good quality work. And you have to be on your team and kind of develop your team and make sure that they're learning and that they're coming up through the ranks stronger than they were before they met you, right? So we always had this team of choice kind of idea is that, whenever your team members leave your team or your engagement and they go on to another engagement, you want them to say, well, I really want to be on that engagement, the one that I was just on. Or you want other people to say, whoa, you really understand this stuff. Where did you come from? Where did you learn this? It's like, well, that team over there, they're really good at explaining this stuff and slowing it down and making sure, instead of just throwing stuff at people and then getting upset if they don't, understand it, really taking the time to develop your team is critical. And so all of that has really gone into kind of how we've built the business, right? So I think when I was ready to start the business, I asked my wife, because that was a big decision, right? The security of getting your paycheck every 2 weeks, no matter what, to this, insecurity and not knowing if you're going to have enough cash to make ends meet. That was a big leap. And so when I was talking to my wife, she says, go for it. I mean, you're already kind of doing it. Think about all the clients that you're servicing right now. You're already billing them. You're already kind of managing the team. And so she gave me a different perspective, and that gave me some clarity to say, well, I've been trained to kind of do this, and it gave me a lot of confidence. So when I started Horizon, I was really doing all the work myself. I went out and I did the work. I drafted the memos. I did the control testing. I did everything myself, and I would bill the client, and I would collect on that work and on those invoices. And so I was doing everything myself. And I quickly realized after the first or second year, I was putting in about 100, 80 to 100 hours a week easily. And I was used to that because that's the way you operate at these large firms. But when we started Horizon, it was very similar. I was working a lot of hours every weekend, and I was getting paid for every hour that I worked. And I quickly tripled my salary because I was making a lot of money and taking 100% of that value for myself. So it felt great. I mean, we had a lot of surplus of cash, but my time was, I was exhausted. And I realized after a few years, I'm like, this isn't really a company or a business. This is just me. Like if I take a month off, like nothing comes in the door. Like, and if you think about like 𝗵𝗷 Kiyosaki, if anybody's read Cash Flow Quadrants, great book, great concept of these quadrants of how you can earn money, right? You're either an employee or you're self-employed on the left side of the quadrant. On the right side, you're a business owner or you're an investor. And on the left, you're trading your time for money. So even though you're self-employed and you own your own business, if you're the one doing all the work, well, you're still trapped. You can never really have freedom because you're trading that time for money. And so you want to get to the right side of the quadrant. And a business owner is very different from a self-employed business owner, right? So I started reading books and started looking into, well, how can I build something that doesn't depend on me to earn income? And so, I think the journey started with, I think it's Michael Gerber that wrote the E-Myth. And so when you read the E-Myth, like the big takeaway that I got from that was, we deal with org charts all the time in internal audit and all the work that we do there. And so I drafted an org chart on my whiteboard. And I pretty much just put, the president of the company, I put all middle management, I put everybody down below, and I put my name in every single box. And I was looking at the perfect organization. What would I want my business to look like if all the pieces were in place? And my name was there from the CEO down to the janitor cleaning out, the trash cans and everything else. So what I started doing is I slowly started hiring people and erasing my name from one spot and adding, one other person's name. So I think our first hire was like Matthew, an executive assistant. And then I had Jennifer to help me with some operation work so I can delegate some work to her and then spend more time on recruiting other people or spend more time on marketing and sales. And so by having that org chart clearly defined, and the project was to, slowly replace myself in every one of these boxes, that's really where I started to see this thing grow. And where we went from, me being the only person doing all the work, once you get to 3 or 4 people, you really have a lot more time and flexibility to focus on higher value hours, right? And so from there, I read Who Not How. And Who Not How is huge on this, right? It's this idea of you need to start changing the way that you solve your problems and stop asking, how am I going to fix this? How am I going to do this? And start asking, who is going to do this for me? Who is going to fix this for me? Because oftentimes the people that you put in place to do the work are better at it than you are anyway. There's a great story, and I forget where I read this, but Henry Ford, he started the Ford Motor Company. He didn't invent the car, but he invented the assembly line, and that created his success, right? He was in a press meeting, right? And so he had a bunch of reporters there that were asking him questions. And so he said, ask me anything you want about this company. And so they started asking him some technical stuff. And what he did, he picked up the phone and he was quietly talking on the phone. He hung up. Somebody came in the room. They whispered in his ear and walked out. And then he answered the question, right? And he says, my point is, in doing this to present to you is that I don't need to be at every level of detail, but I hire people who are smarter than me in their respective areas to manage that. And when I need the question answered, they'll come and give me the data or the information that I need to make my decisions or to move forward, in the way that we need the business to move forward, right? So that concept of not being afraid to hire people on that are smarter than you because they might take the business from you or they might do this or that, you really have to kind of, take that and put that aside and really start trusting in people that are strong performers in certain areas that maybe you don't excel at or that you fumble around trying to learn as a business owner when there's somebody who's already mastered this, or maybe they've spent 20 years of their career in this area. Like I'm a CPA by trade in corporate accounting. I can value a business for you and draft a 30-page memo, to talk about all the technical topics on it. But, I'm not a master at recruiting or HR. I'm not a master at, sales and marketing. So I can go and try to figure that out on my own and fumble around and spend all this time on it. Or I can hire somebody else out to do it. It might cost me more, but we're up and running quickly. And they've already gone through all the hard knocks. So they know what works and what doesn't, and they just implement it right away. Right. So, So that concept of who, not how was huge. And that really opened the door. And then I would say the last thing that really kind of made this practical, we implemented EOS as an operating system for our business, and it transformed the business. And one of the tools that EOS has is Delegate and Elevate. It's a very simple tool. I mean, you can do this on Excel spreadsheet, but essentially what you want to do, and it's evolved a bit in the way that I've organized it. But what you want to do is you want to list out all of the responsibilities that fall on your shoulders from top to bottom, all the way down, right? So are you approving payroll? Are you reviewing timesheets? Are you invoicing the client? Are you actually doing the work? If you're a contractor, are you finding, subcontractors to do the plumbing? Are you doing this? Are you, everything that you have to do? And you list it all out. And then essentially there's a grid. There's like a matrix, right? There's a grid with 4 quadrants. And you want to allocate each of these to-dos to one of the 4 quadrants. And so top left are things that you hate doing and you're not very good at it. And then like bottom left is like things that you hate doing, but you're pretty good at it. Like it's pretty natural for you, but you really don't like doing it. And then on the right, upper right are things that you love doing and you're like natural at it. Like it comes to you easily, right? And you start allocating some of those things that you're doing that fall in that bucket that you just love, that you don't want to get rid of because you enjoy it so much and it comes easy to you. And then the other quadrant, things that you love doing, but honestly, you're not that great at it, right? So once you figure that out, then you can start delegating the things that you hate doing and you're not that good at. That goes first. And the key thing to remember here is that there are people in your organization, or there are people out there that you can hire, that if they were to list these things, it would be in their I love doing this and I'm really good at it bucket. So that gets into like the next level, which is something that we implemented last year, is culture index, and really understanding the psychology of people and what comes natural to them and how you fit the right people in the right seats. And so when you start delegating some of these tasks that you hate doing, you realize that there are personalities out there that may be in your organization or maybe out there for hire that love doing this stuff, and they're going to run with it and they're going to be really happy doing it. And so that really starts to open doors for you, right? Because now you're getting all this stuff off your plate. But not only that, you're happier and you're moving quickly because you're doing things that you actually care about and that come easy to you. And some of that stuff that was sluggish and moving slow on your plate is now moving quickly and getting done much better by somebody else, right? So I feel like that's kind of like the final piece. And so one way that's evolved, I had a friend of mine here in LA, he suggested we do time audits. And so that just makes it makes it so that the list of what you're doing is more robust. So the way you would start this is you do a time audit. So you write down every 15 minutes, you set a timer on your phone, and every 15 minutes you write down what you just did for the last 15 minutes. And you fill out your week, and that essentially tells you where you're spending your time. And so that'll help you kind of list out all the things that you're responsible for and that you're doing. And then you can add to it, maybe that week you didn't work on certain things, but there are things you do quarterly or whatever that you need to add to it. And then you kind of allocate it out in those buckets. Keep everything you love doing that you're good at, and get rid of everything that you hate and that you're not good at, right? And then and that'll start to open up some time in your week so you can start focusing on those high value tasks. So if you're going out and getting business, you're closing a deal, and that's going to be, $300,000, bottom line profit to you, and it takes you 4 or 5 hours to close that deal, then you'd be crazy to spend those 4 or 5 hours, approving a timesheet or spending time, invoicing or doing the bookkeeping for your taxes. I mean, it's silly to spend the time there when you can spend your time on much higher value tasks, right? And that's the goal. I mean, to be happier and move your business a lot faster in the right direction. I think those are the key things that I've learned along the way that I've implemented that got us to where we are today.
I love it. There were so many times I wanted to jump in there and make a comment, but it's such gold that it was like, I need to shut my mouth. I would love to hit on, I love the Henry Ford story. I tell that story all the time to folks because it's multiple things. One, it's having the humility to know that you're not the smartest person on every section of your business, right?
Right.
And being okay with that. If you're like, I was interviewing somebody, I don't remember who it was, but he was basically like, I want to know that I've got such amazing people that I'm like the bottom level of average in my business. Like I may be the owner, I may be the one running it, but I'm like the bottom level of average. So if I'm just your regular average guy, that means there's some studs running through this business that are doing really good, and that's what you should be surrounding yourself with. The org chart side of the house, plugging your own name in there. Absolutely loved that. Putting your name in all of it and saying, okay, these are the ones I need to hire. These are ones I'm really good at. I'm going to keep doing them, but these, I need to plug these in and find the right people for them. One thing I wanted to ask you is, especially when it comes to the financial side, there's going to be a lot of people listening to this. The finance side is not their cup of tea, right? And you mentioned, some people that's their top right quadrant. Like for you, that's your top right quadrant. You know this, you know it inside and out. It's easy for you to do. Like, so finding somebody like you to fill that role frees people up from really like, man, I don't have to think about it anymore. But I think that I've seen and I find that it's once we feel like we found that person, a lot of people just stop looking at it altogether. So how do you encourage your teams, especially like in Beyond the Books, as you're looking at these small businesses, they're finally able to say, hey, I don't have to think about that anymore. Somebody else has got it. I'm going to run over here. But they still do need to think about it. They still do need to be aware of it. They still do need to have the conversations with you instead of just going, yeah, whatever. Because there's a difference between delegating and just being, off in the side, not paying attention to it at all. So how do you kind of engage, or how would you recommend folks be able to stay engaged in there, understand what's actually happening, learn the bit that they need to learn while still letting their team do what they're supposed to do?
Yeah, I think a couple things come to mind. I mean, first of all, in terms of monitoring, once you've delegated something out, I think EOS is really good with this. So, and you don't necessarily have to implement EOS. I do recommend that you do, but depending on your situation, I mean, it helped us so much. But all it does is formalize kind of working on the business, and it gives people a lot of structure around how to do that. And so on a weekly basis, we have these level 10 meetings where it's essentially an hour and a half of your leadership team that has to be carved out every week. And there's only two reasons you would miss that meeting. It's that urgent. It's either you're on vacation or you're dead. So that's a very important meeting that you have on everyone's books or everyone's calendar every week. And so you sit down for an hour and a half. When I first implemented EOS, I'm like, this is crazy. That's too much time. And so once you start doing it, you're forced to step out of the business. And with all the fires that you're putting out, you have to panic for an hour and a half and just trust that nothing's going to fall apart for an hour and a half, and step out and talk about all the things that are going on in the business at a higher level. And each person that's leading each department. So in your example, if I delegate out the finance piece, we have the finance and accounting lead in that discussion. So for an hour and a half, we're sitting in that room with finance, with marketing, with sales, with operations. And we're all in there and we're all discussing the biggest issue in that area that they're struggling with, not the day-to-day stuff, but the big picture, kind of looking toward the next week, looking toward the next quarter, looking toward the next year. What needs to happen for us to succeed, And so that's where a lot of these issues rise up. And as a team, you discuss it. So you get input from everybody, right? And that person may have the ultimate, decision to make, but they're getting feedback from everybody so that they can consider all points of view and all perspectives, right? So that's good. Organizing kind of that check-in and the monitoring of it. You don't have to be close enough to the details to where you're reviewing everything or micromanaging these people, but you should be, on call, or at least have a steady cadence of checking in and saying, all right, let me know what happened this month, or tell me how this department functioned this week. Here are a couple of things I'm curious about. How did that play out? So, putting on your calendar the time allotted to have those conversations and just get a quick catch up. And even if you have 30 minutes or an hour on your calendar, it could be a 5 or 10 minute conversation. You get your hour back, right? But you want to ask those questions. You want to make sure they have an opportunity to raise issues to you. And we have an open door policy. So anytime somebody needs me, they just ping me on Teams. My assistant will kind of move things around and schedule some time if it's urgent to discuss anything. Because when you have the right person in a role overseeing a department, issues rise up, right? And the issues that get to them are the ones that nobody can answer and are difficult, but they're tasked with figuring that out. And if there's an issue that they're afraid of making a decision on without your consent, or they just don't know how to address it, then those are the ones that come up to you, right? And so unfortunately, those are the ones that don't really have a clear answer, and you just have to kind of work together as a team to figure out the best way to do that. So I would say that's probably, the most important thing is to monitor and just to get structured and organized on that and put it on your calendar. So you have that time allotted for checking in and discussing all of that, right? And then the other thing I would say is with most of these things, before you delegate, you should spend some time at least learning about it or doing it yourself, so that when you do delegate, you know more or less what your process was and what the expectations are as you release it, right? So, the example that you were saying is let's say it's in marketing, right? I don't know anything about marketing, but I will learn a little bit about it. I'll try to do it myself. I'll see where I'm failing. I'll see where the issues are, what's working, what's not working. And now, we're bringing on a marketing team we're fully outsourcing that department. And so we're bringing on a team that's going to represent and be our internal marketing department. And so I already know kind of, here are the things that we've done. Here's what works and what doesn't work. Here's how we were doing it. Now I'll let you tell me what we should be doing, but I at least have an idea of, if you're thinking we're going this way and we've already done it and it didn't work, I'm curious to see how you're going to do it differently than me, because maybe you'll be successful at it. And what I was doing, some nuanced detail in there, or maybe some follow-up or some nurturing that I wasn't doing that we're now going to be doing that we're willing to try out. So I think it's important to at least get your feet wet in some of these areas, or at least sit alongside them and commit to onboarding them and working closely with them as they carry this stuff out is important, because then at least you're up to speed on it and you have somebody more intelligent than you working on it, but you at least know something of the area, right?
Yeah, make sure you have enough knowledge to let your BS meter peg when something's going on, right? That you could see through some of the nonsense, because
well, that's the thing. You have to be able to catch or identify that if you're going in the wrong direction.
For sure.
Right?
So I'm curious what that looks like for you right now. Like if somebody's got a small business and they're coming to you for beyond the books and they're like, hey, like I really want to be able to delegate this out. Financial projections and all this stuff is just not my forte. I don't really know how to do this. How do you engage with your clients? How do you make sure that they still have a really good pulse of what's going on? And are you on these L10 meetings if they have L10 meetings, or is this like a separate thing? How does that kind of look?
Yeah, so we have a team that works on this, right? So we'll have a team that is, so on a monthly basis, we're closing out the books from the prior month. So we're essentially taking corporate accounting and those best practices and what we think is like standard issue, and we're applying it to small business. So we'll get you on this monthly close cadence. We'll get you on accrual basis accounting so that you can do a proper analysis. We'll get you on this monthly cadence. So the team member will be doing the bookkeeping, closing everything out at the end of the month. And this is what we provide to our clients. But for anybody listening that has a bookkeeper or has an accountant that is managing their books, you should be asking or demanding this of them, right? So on a monthly basis, they should be closing out the books. They should put it in accrual basis, because that allows you to kind of flatten the curve. If you're looking at your financials on a cash basis, that's important for taxes. It's necessary for taxes, but it doesn't allow you to properly analyze what's going on with the business or where you're going, because it's lumpy. You might be collecting cash. Like last month, revenue was like, $500,000 and your expenses were only $30,000, but that revenue might be cash collected over the last 4 months, right? So it doesn't really tell you that you had a killer month. All it tells you is that you collected a bunch of cash that month, but you might have been, if you look at what you produced in that month, you might be negative. Maybe you didn't have any revenue that was, invoiced or incurred in that month, right? So the accrual basis will help you flatten that line out so you can see how productive were we in that month. Are we, that cash will collect later in the future, but do we have a right to that cash? Like, did we actually generate sales that exceed our expenses? Were we spending too much in a certain area or not? If you're looking at cash basis, maybe you're paying a bill in the future, but you don't know whether or not that bill or that expense was incurred in that period. So anyway, I might be going too far. Rein me in a little bit if I get too far into the CPA nerd realm, right? And this,
You're good. You're good.
Too detailed. But anyway, long story short, what we do is we'll close out the books, we'll do the financials, we'll do an internal analysis. So we'll look at like a trailing 12-month average for each month of the income and income statement and balance sheet, so that we get an average of like, okay, how much do you spend in travel? How much do you spend in cost of sales? How much do you spend in this on average over the last 12 months? And we compare it to this month. And so if something looks off, like maybe your utilities are like double what they've been on average, right? So then we'll drill in and we realize, we have 2 months in 1 month, so we have to accrue for one and move it out. So we're doing like an internal sanity check to make sure everything is accurate. And then we have a manager that's from the Horizon side. So these top tier big four CPAs will step in for a few hours and they'll review everything. They'll come up with some insights, some questions. They'll say, hey, this is trending this way. Why are margins larger this month than last month? We had a large expense here. Is this accurate, or is there something odd going on? So they'll start asking questions, and then we'll meet with the client once a month and we'll present the financials and we'll do that analysis together with them. And so we'll say, here's what we identified. Here's what, here are the questions that we have. And then we give the client an opportunity, because they're close to the details, to review it and see what jumps out for them, right? Because they might be thinking like, hey, meals and entertainment went up, maybe it's 3x the average, but they're thinking, oh, we did a conference last month and it's perfectly reasonable and we're okay with that, right? But if you identify that travel is double what it normally is, and they're like, oh, that's odd, we didn't do any travel last month, and you start drilling in and you realize that you have an employee that's putting personal travel expenses on their company card, and then you start adjusting policy or course correcting.
Or firing people or
that one of the reasons, the main reason we're doing audit in these big four firms is to identify fraud and to identify error. So we're putting these best practices in these small businesses to say, hey, this is one of the things that everybody does just to make sure that, like, hey, are you driving the ship correctly? Can you course correct timely? Because if you're not looking at this stuff, you might find out a year from now that this person's been stealing money from you, and now you're out 150 grand when you could have caught it at the 10,000, mark, right? So we do the monthly meeting, and then on a weekly basis, we send out what we call the weekly cash metric. It's essentially the working capital for the next 30 to 90 days, updated weekly. And so that goes to the client. The client has a chance to review that. And in our meeting, we go over those few things. So they're involved. And if they operate on EOS, we'll sit in on that level 10 meeting. But we have to take a look at the hours and just make sure that we're not going over the hours that are allotted, because that could be an additional scope of work. So in some cases, we either bill extra for that time or we can absorb it. If the transaction and the complexity of the business is low enough, we can absorb it in the fixed costs.
That makes a lot of sense. So for somebody that's listening to this, maybe they have a controller and they're thinking about a fractional CFO. They're thinking about somebody like you that's going to take this to another level. That's not just kind of, looking at the past, but helping really project the future. If they're hearing this, like, what are the probably top 3 things that they should be looking at to say, yes, this is definitely what I should be doing, or no, maybe we're not quite ready yet?
I think the biggest thing is, how are you sleeping at night? Are you worried about cash? Are you worried about, when you go to Europe with your family, are you like, I don't know if we should be spending this much? So if you have those doubts, then you should be implementing some of these things. You should be demanding that your current bookkeeper or accountant at least gives you some roadmap or some visibility, because essentially what we're doing with the cash. So this is a good example, right? You have an operator that has 800,000 in the bank, and they're like, oh man, we're sitting pretty, 800 grand. We're good. Let's go to Europe. We'll take the family and we're good. What the working capital cash projection does, takes that 800 grand and it factors in, okay, what's everything that you need to pay out in the next 30 days? Annual, software subscriptions, payroll, credit card expenses, anything in the next 30 to 90 days that you're going to have to pay out, right? What is the cash coming in? What are you expected to collect in the next 30 days? So now that 800 grand goes down, it goes up, and it's adjusting, right? And then you get to like your true cash number for the next 30 days. And then you have to pull out reserves, right? Because you're going to have to pay taxes every quarter. So you should have a quarterly estimated tax reserve that's accumulating every month, so that at the end of the quarter, part of that 800 grand is kind of already allocated to taxes. And then you should have like a safety net reserve. And depending on your risk tolerance and the nature of your business, maybe you do 3 months of overhead expense, maybe you do 6, but you should have a reserve. So let's say you're doing 30 grand a month in overhead expenses, not like cost of sales, but overhead, like rent, the expenses that if you had zero revenue, you would still have to pay, right? Let's say you're at 30 grand a month on that. So times 3, you should be at 90,000 as a nice cushion and a rainy day. So maybe you'll never get to that, but having that cushion will allow you to kind of to move smoothly through the months as things kind of ebb and flow. And then you're left with like $30,000 or $40,000, right? So now where you thought you had a 800 grand, you really only have 40 grand. And that might change your decision about whether you go to Europe or if you do like a local, weekend getaway instead. And so then you can breathe easy, or take out the 40 grand and know that your business is comfortable without it. Or maybe you're negative. And if you're negative, then you're going to have to draw on that line of credit. And then it's maybe, okay, we're not traveling this summer. We're just going to hold off because, I need to tighten things up a little bit at the business, right? And so knowing that ahead of time, because whether you like it or not, that information is going to show up. And so if you're not sleeping at night because you're not sure whether or not this is the case, eventually you're going to find out that you're negative 40 grand and you're going to have to scramble, sell assets, pull from the line of credit, do something to inject money into the business. And you don't want to be reactive. You want to be proactive. So if you know that ahead of time, now you can like calmly go to the bank, negotiate good deals. Maybe you can, move things around and some personal things and inject more cash into the business. And then you're operating a little bit more sophisticated, right? So
I love it. I said the top 3 things, and I think you said 3 things in that one part without even maybe realizing it, right? So are you able to sleep at night? And then do you have an understanding of what those numbers look like? Do you have an understanding of what your reserves are? Do you have an understanding of what all the? If you don't, you need somebody that's helping you get that down, because it's going to come back and bite you in the butt. It's happened to countless other small businesses, and it's bound to happen to you.
Business as usual. We think it's standard. This is how you run a business, but that's not true. I mean, once you get to the next level, it should be much more organized. And we're talking about delegating. I mean, you can do this all yourself, but the amount of work and the hours that go into it, it's not worth it. You have much fun. I mean, if you pay somebody else to do this and get this reporting for you and give it to you on a weekly basis or on a monthly basis, all those hours you free up off your plate to go and get some high value business or sales, or you're working on a key client to retain them. I mean, you're going to, you can make 300-400 grand in the time that you're spending, trying to figure this stuff out on your own. And again, going back to that delegate and elevate, maybe you hate doing this stuff, but you're stuck in there trying to figure out, I have an Excel file that takes, the cash, and I kind of have an idea of where the cash is and how much money we're making, and but how much time are you spending on that, right? That's a very key thing, that if you like doing that, you're more of an introvert, you really like kind of focusing on that stuff, and you get a rise out of solving problems and getting to the right number, then maybe it works out for you, but is that the highest value use of your time? I don't know.
Probably not in most cases. If you're the owner and you're the CEO, it's probably not. But Alex, this has been a great primer for a lot of people to really hear this and kind of smack themselves in the face and go, all right, should I really be working on this? Should I really be thinking about this? These are the types of things that people don't think about delegating, especially in a world right now in the business. Everybody's thinking, okay, I can get a VA for this, or I can, get an administrative assistant for that. And it's like, well, yeah, but what are we really doing in the business side? Like, let's figure out what are going to be the big dollar makers as well, right? Like the admin stuff gets some of your time back, but this could get you a lot of your money back. So, Alex, if somebody's hearing this, what is the best way for somebody to reach out to you if they're like, dude, this guy's obviously got it down. I'd love to reach out to him, learn more about Beyond the Books. What's the best way for folks to reach out to you?
Yeah, I mean, anyone can just, feel free to text me or email me. I mean, my email is pretty straightforward. It's alexv@horizonadvisors.com. And then on the Beyond the Books side, it's alex@beyondthebooksco.com. So email is fine, or, if they reach out to you and you guys can always reach out to me. I'm happy to discuss with people, but I'm also very open with my phone as well. So if somebody wants to call or text, if they go to horizonadvisors.com and go to contact us, there's a form there that you can fill out, or our phone number is on the website. You can always call that number directly, and it gets forwarded to me directly. And then we line you up with the right people in the business to see, is this a good fit for you? And a lot of times, to be honest, Adam, like maybe it's not the niche that we service. It's not a professional service firm or real estate investors, and so we won't be able to take you on, but we know somebody that could, or I'm happy to just talk with you and give you my suggestions as to what you should be asking of your current, bookkeeper, and whether or not they're, the right person to be doing that anyway, right?
For sure. Yeah, well, that is fantastic stuff. So everybody listening, if Alex can do anything to help you, which obviously if you're looking for finance stuff, Alex can very much help you. So please reach out to him, jump into his email, give him a phone call. Alex, thank you so very much for jumping on. It was great to hear the experience, to learn a lot about the finance side of the house and get my brain thinking in a different way. I hope everybody listening enjoyed that. If you did, please like and subscribe, share it with somebody that you think could benefit from this conversation. And Alex, again, thank you. Everybody, thank you. And we'll see everybody on the next show.
Yep. Thanks a lot, Adam. Thanks, everyone.